All right, friends and fam and YouTube crew, before the video starts, I really want to take a second and appreciate you all for stopping by to my channel. You know, you've got a million other things you can be doing, and instead you're spending some time with me, getting some knowledge about the markets, and I really appreciate you guys. Feel free to check out my other videos, and of course subscribe and like and comment the video to get the word out there. It's going to be a big help to me, and again, I really appreciate the support and time you guys are spending with me. And again, guys, I'm not any type of advisor, so of course make sure to do your own research when getting money in the markets, but please get some dang money in the markets this week. At least some anything, get anything into the market. So just want to really thank you guys, and all I ask for is that you pay some attention to the video. I really want to encourage everyone to get some money into the market this week. Of course, don't go all in. I'm only asking you to set some money aside and put 10 to 20% of that money to work. You can see right now the market hasn't even opened. It's overnight trading on Sunday, and the market's already gapped down 4.5%, and we're not even open. So this is, times are really uncertain. But just get some money into the market, guys. And again, I really thank you for spending some time here with me. Definitely please pay some attention to this video. Get some notes going. I'm going to be explaining some great things for you, and also showing you some historical data on why you should be invested. Really pay attention, guys, and I really hope you enjoy the video. Subscribe to the channel and keep coming along with us. I'm going to be going over futures and options, day trading, swing trading, long-term investing. Also going to be doing a little bit of some vlog style stuff, car content, gambling. No, I love gambling, man. But I thank you guys again for stopping by. I hope you enjoyed the video, and take care, guys. All right. Happy Sunday to all my friends and family and YouTube crew. I'm Investor Brad. Welcome back to my channel. And I really wanted to get on here this weekend. Today is April the 6th, Sunday. Happy Sunday to everyone. And this video is really going to cover getting into the market at a time like this, when the Nasdaq has fallen really 10% this week alone. Of course, Wednesday we had the big announcement from Trump about the tariffs, and that same day market sold off heavily in the evening. Thursday as well, Friday as well. So it's just an absolute bloodbath this week, guys. But of course, this is the best time to invest, regardless of your political affiliation or what you think about right and wrong. You've just got to get money into the markets when opportunity arises. And this is one of those times. And, I personally think anyone in the U.S., anyone and everyone should really be taking advantage of our beautiful financial market we've got here. You really should be invested, making money in your sleep, owning these big companies. You can be a part of them and the profits they make, and it's really not too difficult, and it doesn't take much time, which is why I'm putting out a video like this, to just create lots of value for you guys so you can get started right now. I mean, on a Monday morning this week, you can buy some dang stocks, because this is the time to buy, and you really gotta have your stuff together and ready to go. So of course, it was an ugly week in the market, guys. I've got to get this video out ASAP for you. You've really got to be ready. So let's get right into the point. Of course, guys, I want to cover sort of what have been the last in the past 8 years, 10-ish years. What has been the best time to get into the markets? I'm going to go over that. I'm also going to explain to you guys kind of how to average into the market. You don't want to buy all at once. You want to take your time with it. I'm also going to hit you guys with some historical data for some of the top equity researchers on Twitter. So you guys are gonna love this. I'm really gonna make the case for why you should buy stocks. And from there, I'm also gonna give you guys some of my favorite stocks I'm looking to buy this freaking week. Okay, gonna give you guys that data, which is gonna actually convince you and kind of clear your minds and put you at ease as to why you should be investing. This historical data is really gonna blow your mind. It's gonna be far from what you think. Let's get right into it. So right up here, I've got the Nasdaq symbol QQQ. Triple Qs. This is the ETF focused on technology companies. You've got Apple, Microsoft, Facebook, Tesla, Amazon, Nvidia. All those stocks I just mentioned make up 30 to 40% of the Nasdaq. Now, what I'm going to go over here on the Nasdaq can be easily translated to the S&P 500. So we're going to kind of skip the S&P 500 for now, but the same concept can be placed on it, okay? So guys, we're looking at the Nasdaq here on the weekly time frame, okay? Of course, one of the more popular indicators to use is this RSI indicator I have, which simply measures oversold and overbought conditions, which today we're focusing on oversold conditions, which is exactly what we've got now. So of course, Wednesday, Trump broke the news. We're getting those tariffs everyone was expecting, and the news was actually worse than expected. Far worse than anyone had expected. Way higher tariff rates anyone had even imagined, on more countries than anyone had imagined. And whether you like it or not, it is what it is. You have to take advantage of these situations and just buy some dang companies. So if we focus here on the weekly time frame on the Nasdaq, you can see we're currently we hit an oversold reading down here on the RSI. 30 over here, you can see to the right. This bottom yellow line here means 30. This is 70. Below 30 is oversold, guys, and we currently just hit oversold on the weekly RSI reading. Now this is insane because the last time we were oversold was down here. Don't worry about that. Was down here, guys. You can see my green mouse was down here, which was May of 2022. Now you can see as soon as this oversold reading came in 2022, of course this was when we were hitting 9% inflation. This year was incredible. 9% inflation, which was a tough year. And then the Federal Reserve finally increased rates to combat inflation, and we made it out. So just take a look, for example, if you just happen to buy some of your favorite stocks, or even just the Nasdaq, the basket as a whole, you decided to buy this as soon as you got the oversold reading. Down here in May of, let's call it June of 2022. Within the next, let's call it 8 months, you were already up. And not only were you up, but from there on out, if you just own something like the Nasdaq, I'm not even talking about individual stocks, which will move way more. Just the simple Nasdaq. A couple of weeks ago, you were up nearly 90% on your capital. So you had invested 10 grand, you pretty much made another 10 grand, which is absolutely mind-blowing on something as simple as the Nasdaq, which most people's 401ks are already exposed to the Nasdaq, which was a great run. Which was a fantastic run. Now, before that, of course, we had 2020, which was the big virus, which was the big crazy virus, and you can see this one was a way quicker drop and bounce. However, you can very visually see here on the RSI once again once again, you can see as soon as you hit the oversold reading, it was a fantastic buying opportunity, and you again made brand new highs and just continued from there. Let's see if you had just bought in before we broke the highs. What is that? Another 90%. Look at all this money you're making just by buying when this thing's telling you you're oversold, guys. It's that easy. It's really that simple, okay? There's more to it, but you're getting the idea. And then we had 2018, Trump's first round of tariffs, okay? What do you know? You didn't necessarily get overbought, but you were just 1 point away from hitting 30 oversold. Another fantastic buying opportunity, guys. You know, you're just getting opportunity after opportunity after opportunity in these markets, which is absolutely insane. Now, the reason why I'm making this darn video is because I've got friends and fam that have gone years without investing a dollar into the market because they're scared of, I don't want to say scared, but I understand where they're coming from. But you know, they're looking out for their capital, their hard-earned money, and they're scared to put it at risk, and they think they don't have enough time to research these things. You don't need any research, man. Just go ahead, set like an hour aside a week or a couple minutes a day, follow up on these things, and you can be a part of the market. You don't have to, pay a big financial advisor to do all the stuff for you guys. It's this easy. So I'm laying it out for you now. And I've got some friends that have been waiting for a market crash the entirety of our friendship. I'm not going to call anyone out. Yeah, I'm not going to call anyone out. But I'm waiting for the crash, Brad. I'm waiting for the crash. I'm waiting for the crash. I'm waiting for the crash. Like, I've known you for 8 years and you're still waiting for a crash. And even when we did have some crashes, it wasn't enough for you to get money in. So every guy's got to get some money in there. Be responsible. Just like this one, well, I'm going to be honest, these other ones here, we're at 10 minutes already. You didn't have that much time to get in the market, okay? I'm going to be honest. The move down, well, the sharp move down was more like 4 weeks and took another 10 weeks to recover. COVID, oh my gosh. Look at that. 1, 2, 3, 5 weeks down and then like 10 weeks to recover. But it happens quick. And now you're never, ever going to catch the absolute bottom, which of course is what everyone wants. You're never going to catch the bottom. So the second you get these oversold readings, you've got to be in there. You've just got to be in there. Now let's talk about averaging into your position, okay? You first have to set aside some capital that you're okay with not having access to for about 5 or 10 years, okay? I recommend everyone go to Charles Schwab and create a darn individual accounts and products, open an account, individual account. There you go. And of course, if you're looking to make some tax-free gains and go with an IRA, but guys, this is as easy as opening a dang bank account. So please, and look, you don't even need any money to open the account. So get the dang account open immediately, and you've got to get money into it this week, and you got to take advantage of this week. Charles Schwab, individual brokerage account, super simple. And you can do more research about this all over the internet. You can find out how to get this done. Back to the Nasdaq. Now, you're not going to, okay, if you are working a few jobs or if you've just got some money aside you don't need to touch, right? Let's say it's 10 grand, okay? And you've got, apart from this 10 grand, you're ready to get into the market. You've got another 5 grand in your savings account for a rainy day when your car breaks down. You've got a little bit of money everywhere and you're set to go. Now this 10 grand, you don't need to touch it for the next 5 or 10 years, okay? Go ahead and get that in a Charles Schwab. And this week, as the market keeps falling, everyone thinks today's going to be Black Monday and all this other crap. And it might be, okay? It might be, which it can't, because now we have circuit breakers in place where the market falls 7% or more like it freezes, and it's got to be that bad for something like this to happen. Um, but you're gonna slowly average your money into the market. You're gonna choose your favorite stocks, a handful of them, and you're gonna start getting small amounts of money into each of them. Okay. What I mean by this, and come on guys, keep paying attention. I know we're going on 10 minutes already, but instead of you going to do research for the next couple hours and understanding these things, just listen to me for 20, 25 minutes and you've got this in the bag. Please let me have your attention. With that 10 grand you have, right? Let's say you've got the cash already ready to go. This week, you're going to average in 10 to 20% of that 10 grand into your favorite stocks, okay? What you're not going to do is grab all 10K and put it into one single stock all at once. Because first of all, things are really uncertain, and this market can take a couple weeks. It can take a year to recover. You don't know. So you've got to slowly start averaging in your money. You get the first 10 to 20% of your capital into the market, into your favorite stocks, or if you want to go into something much safer, you can go directly into S&P, the Nasdaq, or like I would recommend a cybersecurity ETF, bug, BUG. That's like one of the things no company can not spend extra money on is cybersecurity. That's the biggest thing. You've got to be super secure, all that kind of stuff. BUG, ticker symbol. You've got the first 10 to 20% in. If the market keeps tanking, get in another 10 to 20%, okay? So you should be at around 40 to 50% of your capital there. Now, what I mean is when you hit that 40 to 50% mark, before you start averaging the rest of your capital into the market, you want to wait for more of a dignified bottom. What I mean is you don't want to be catching, while this is falling, let's say here at 380, you get in, market's falling, you get in 10% of your capital. 360, you get another 10% of your capital here. Now, if you're seeing the market starts making new lows, hang on a second, you gotta pause. Go ahead and put another 10%. You've invested 30% of your capital. Keeps falling down a little bit more. Go ahead and do 40%. Now, don't start putting in more of your capital until you start seeing more attempts lower that get bought up. Like here in 2022, a market pushes down. It doesn't matter who's buying. It's being bought up. Another attempt down, it gets bought up, and it doesn't even get as low to the previous low it made the previous month. Yeah. Now you see that the market's made a higher low. So you're seeing more of that bottoming effect. You're seeing more, instead of buying, 10%, another 10%, 10%, 10%. You've gotten 40 invested. Don't put in that 50% or more until you start seeing more of a bottoming, okay? And then on the way up, you see this thing start recovering, then you wanna push the gas and get more money into the market. But where my thumb is at here, where my cursor's at, first 10%, another 10%, markets breaks to a new low, 30%, 40% down here. Now 50%, really wait until the market starts recovering a little bit, okay? 50, 60, 70, and your average, you didn't get all your money in at once and expose yourself, and you're panicking to so much risk. You averaged in your buying, between a couple weeks. So it's less risky, and then it starts recovering, and boom, you just became a part of a great stock market opportunity. You're going to be making money in your sleep. You're going to be taking advantage of all this, all without an advisor, man. Like, you got this. Okay, now let's move on to the next topic, which is going to be that historical data, guys. You're going to freaking love this information I'm going to have for you. Quick recap. 2018, first round of Trump tariffs, oversold, excellent buying opportunity. take out the highs, and continue. 2018 up to 2020, excellent run. Now, on average, the market has a correction of 10% or more every 18 months. I don't know if it's 5% or more, 10% or more, but one of those. First round, 2018 Trump tariffs, excellent buying opportunity. This was 2018. COVID of 2020, oversold, excellent buying opportunity. High inflation of 9%, 2022 going into 2023, oversold, excellent buying opportunity. And you can see this part here. When was it that we had the 9% inflation? 2023, 2020, almost 9. I think like on a year basis. Okay, so 2022, this was, so March. Okay, so May. Yeah, so May, look at this. May was the highest inflation we had, and May was close to the bottom. And what you can see, guys, is inflation was at the highest point here, and the Federal Reserve had to step in and increase interest rates to combat inflation. And I have it written down here. When did they have the first rate hike? The first rate hike was in March of 2022. So March of 2022, where are we at? Around right here, they had their first interest rate hike. Then you could see here, inflation starts coming down, finally coming down from 9%. I think here it was at around 6%. Let's take a look when it really started coming down. So if you take a look here, we really started breaking out and recovering March of 2023. March of 2023, we had already been at 5% or below. So you can see after hitting 9% inflation, markets, the interest rate hike started combating inflation and they brought it back down successfully. Boom, market rips from there. You made a killing if you bought during this oversold session. Oversold 6 months. It was a tough 6 months though. Like, imagine your account not really seeing a new high for over a year, but that's why you've just got to keep investing. And what do you know? Now you're getting the oversold reading once again, guys. So it's time to get in there. Now it's time for the historical data you guys are going to love. Guys, and I quickly want to go over the virus incident that happened and how the market reacted to it, and also where the 9% inflation came from, all right? Just as a quick little history check for you guys. It's actually really interesting. So, of course, that virus starts hitting California first, and then a couple cases in Florida, and then in New York, and then before you know it, the whole darn U.S. has the virus, and things start getting bad. And of course, it was a big chaotic shock to the market and to the U.S. and supply chains and, the entire world. No one was prepared for it. So what did the Federal Reserve decide to do to prop up the market and stop us from having this, having this downturn becoming even worse? They dropped interest rates down to zero. Borrowing cost got really cheap. They stimulated everything, and that's what got us this big run. So companies could borrow money really cheaply, and it basically, it devalued our dollar, which, whatever. But it's kind of kept us okay from this whole COVID thing happening. So of course the market rips, but if we're handing it, it's pretty much free money. That you're borrowing at really low rates. With that comes inflation. So we were having that 9% inflation, and then it's, the Fed has to do something about it. So they had dropped the interest rates to stimulate everything. So now, to get everything back to an equilibrium, they had to start slowly raising rates again. So of course, as they started raising them in 2022, it starts countering inflation, and inflation goes from 9% down to 8, 7, 6, and then once we finally hit 5 over here, the market starts realizing, okay, we're actually not too bad. Things are getting under control. We're good to go. Boom, new highs. Now, guys, let's take a look at that historical data. That's really, really going to fascinate you guys, and it's really going to keep you at ease and remind you that it's these bad times that you really have to take advantage of, okay? Let's go for it. So these charts are from Charlie Bilello on X. This guy posts the best data. So if we look at this first one, guys, very quickly, I want to explain the VIX to you guys. So this is the volatility index, and this just pretty much looks at times when the market is scared. There's just lots of trading volume, and people are hedging themselves against uncertainty, things that can go wrong. So of course, this is showing us back from, this is really a long time. But simply, guys, when this thing starts shooting up, stuff is not looking good, okay? And of course, Wednesday, the news came out of the tariffs. Thursday, we tanked. Friday, we tanked. And guys, it's so darn bad that now that the futures market opened on Sunday night at 6 p.m., the market's already down another 4%. It's insane. Like, this amount of selling is actually insane. I'm looking at Tesla over here to my left. It's at 210. So that's actually happening right now. Right now, this is happening. It's freaking insane. So when the VIX shoots up, things are going insane. And then people and hedge funds are actually buying this index right here. Because as you know, while everything's crashing, this thing is moving up. So it's like a hedge. It's like a hedge. Now, if you see, of course, that means that this is going to move during times of uncertainty, COVID, 9% inflation, the wars. Whenever things start getting bad and uncertain, this shoots up. Now, you can see something he mentioned here. The VIX increased 109% last week, the third biggest weekly spike ever. What has happened in the past following the biggest VIX spikes? So, you can see here. You guys can see here. Let me explain this for you. Oh no, let's get back over here. So this is gonna show you the date of when the VIX had a week. A week where it spiked immensely, and you can see nearly every single time the market has had a 100% increase in the VIX within a week. You're pretty much green 1 year later. You can buy the S&P 500, just the S&P 500 index, which is a basket of 500 of the largest U.S. companies. Boom. You can see you're pretty much come out making money with when 1 year later. Who can't put money aside for just a year? Come on now. And this goes back to, I don't know when it does that, but you've got 2020, 2014, 18, 2008, 1994, 97, 94 again. Look at that. The 1 week VIX spike from 17 to 40, 40, 40. These are all the biggest spikes, which of course, what happened and this is the weekly time frame. So each candle here is 1 week. What just happened this week? The start of the week went from 20 to 405%. My God, 405%. From 20 to 45, okay? 45, this is the one we're currently at. Was there another? Oh, you've got a 70 here. What happened to the 71? The worse it got, the bigger the bounce. Look at that. The worse it got, the bigger you were up. Wow, 5 years later, 110%. That's fascinating. 70. This might be yeah, oh my gosh. This is the biggest one in a while. Wow. 1 year later, almost 100% of the time. Let's call it We gotta do more. Let's call it 85% of the time you're up 1 year later. 2 years later, you're dang near 95% chance of having a green second year. Just look at this. Now watch this, guys. Now, if we take a look at this one here, the S&P, look what he posted. This was Friday. I'm sure this was Friday. Saturday. He posted the S&P fell 10% over the last 2 trading days, which was the fifth biggest 2-day decline in the S&P 500 since 1950. What has happened in the past following the biggest 2-day declines? Of course, stocks ripped. Let's take a look. Back in 1950, 87, COVID right here, Great Financial Crisis 2008, this year, 08, 2020, and 08. Every single time the VIX has spiked, that the S&P has fell 10% in just 2 days, you have a 100% rate of being green within the year. The next three years, 100%. Next 5 years, 100%. So this is a screaming signal for you guys to be long the market right now, okay? Go ahead and pick your favorite products and services you have around you right now. I don't know about the iPhone because of the tariffs that are coming in, so maybe not Apple, but look at the things around you that you use and that are so convenient. Your computer stuff, NVIDIA and AMD, your Tesla car. Think about the things closest around you that you can't live without. And just buy your favorite stocks, man. And if you can't think of something, just buy cybersecurity. You can't go wrong with cybersecurity, or just the Nasdaq and the S&P alone, okay? So these two charts here are showing you the odds that you're gonna make money if you invest this week is so darn high. It wasn't this high 2 months ago, 4 months ago, 6 months ago, even a year ago. You didn't have this kind of certainty. You have it now. Of course, there's no telling what the heck is gonna happen. Like, there's also this other gentleman I follow, and I've got his so Tom Lee is a big money manager. I love this guy. He has very precisely called out when the market's bottoming, when the market's topping, and what's going on since 2020. He hasn't been off one bit. Just the other day, he did not think Trump tariffs were going to be that bad and that the market was going to pump after we heard the news because it was going to bring clarity to the markets. We got the complete opposite, worse than expected news. Everything crashed, man. So it's like, even this guy, just wasn't too certain about what's going on. No one is too certain about what's going on. But one thing is that it's a great time to buy stocks, and that whether you like him or not, Trump cares about the market. He wants everyone's 401ks to be healthy. He wants everyone to be happy, so he's not going to let this thing get too bad. But again, remember, the bottoms can, the recovery and the bottoming can take a few months. It can take a few weeks, so you just got to start getting in, man. What was this one? The VIX. Can I zoom in a little bit? Oh. How do I zoom in? Let's just go to this real quick. The VIX ended the week at 45.3, among the highest weekly closes in history. What happened in the past following the highest VIX levels? Guess what they did? The market rallied 100% of the time over the next 1 to 5 years, with returns far above historical averages. So you can beat most advisors, most hedge funds, you can beat them right now just by buying the dang S&P or Nasdaq. It's that simple. You can have here, I hope this goes back from a long time, but 09, 2020, oh wait, okay, well, but I know it goes back further. It's almost like that 1950s chart that I showed you. Anytime in the past 20 years that the VIX has closed over 40, over 40, you're green 100% of the time the next year. The next darn year, guys. So just take this into consideration. And I'm making the case and I'm really stressing this so that you guys can get some darn money into the markets, okay? Because this is the time to do it. This is the time to get in. Okay, what should we jump into next? Historical data. Let's see. Multiple attempts down, market breadth. Guys, the other thing was also when you want to buy, when you're after you've invested your 10 to 40% of capital. And remember, when we're waiting for the bottom to really form, you want to see attempt lower, it gets bought up. Attempt lower, it gets bought up. Attempt lower, and it gets bought up. And then you start seeing the recovery. Guys. Another big thing you want to look at, which of course this was going to take more time, but you want to look at the market breadth. They call it, it's almost like breadth, but it's breadth. And the reason why, guys, is because the breadth is pretty much just showing you the sectors, the different sectors of the market and how they're moving against each other. One great way to kind of tell when the bottom is in and when you should get more money into a market that's been tanking, you want to see more sectors recover altogether. So like, of course, this week you had like consumer discretionaries and like Nike, while you also had oil and the whole energy sector was coming down. So really everything was getting beat up. So when you're looking to buy to average in the other 50% of your capital, you really want to see the market as a whole recover, not just technology stocks, but like just the different sectors. The S&P 500 has 12 sectors. What is it? Technology, industrials, energy. Oh gosh, I can't even name all 10 of them, but 12. I think it's got 11. It's got 11. That's another thing you guys want to look at, okay? Let's see what else we have got. Okay. Now, Charlie, we went over these here. These were really big. Okay, now guys, it's really just time to jump into our favorite stocks. Alright guys, so I really want to make the case for Uber very briefly. So Uber is just a stock I'm so in love with. If you're going out with your fam to drink, or not to drink, but you're going out to dinner and you want to catch a nice buzz, you're going out with your friends somewhere, or you're taking a vacation to Cali or New York, Uber is so dang convenient. Like, you used to have to rent a car everywhere you went, and now you have Uber that can take you everywhere for less than half of the price of renting a car. So it's just so dang efficient. I know lots of people that can't get throughout their jobs, their busy lives without Uber, okay? They just can't. Now you take Ubers everywhere. You don't even mess with taxis, nothing like that. Where is the Netflix thing I just had? Oh, okay, that's what it was. Yeah, guys, so with Uber, you guys can see here, this thing is currently trading at, let's see, I think it's below $60 now without we're crashing. Let's take a quick look. Yeah, so right now, Uber is at $59. Oh my gosh, I'm looking to get under 55, man. Under 55, I need to add more, but it's just insane how the market's not even officially open. It's Sunday night, and this thing is still crashing, dude. It's just insane. However, Uber is now at $60, guys, and you can see on tip ranks what the average consensus for the company is. The average estimate is right at around $91 a share, which is nearly a 50% increase from where we currently are. And you can see the ratings, perfect ratings on this thing. Okay, now, of course, I've been in Uber for some time now. These are actually yeah, guys. So I wanted to show you guys my buying an Uber. Of course, I've been in this for some time now, so I'm happy to say that I've been in Uber stock since before they were a profitable company, meaning the company operating in its entirety was losing money. It was not bringing in any profits from running their business. Was in this stock before then. So my first buy was at $27 a share back in 2022. And you can see that's highlighted by this purple. Wait, is it? Make sure it's right. October 2022. Yep. That's highlighted right here. Oh, wow. Actually, way down here. October 2022. Dang. Yeah, so I've been, of course, so this is where I bought. But guys, this has been probably my biggest winners ever. Just look at the percentage return. I was up before this week from just those first shares I bought. 200%, man. On just a share. Of course, I've bought more. I bought again at 32, at 47, at 78. So you can tell my average now is closer to, I know it's under 50. I know it's under 50 now, still. But you can see from my first buy, $27 a share, guys. It's an absolute killer investment. So you can see, I've been in this since $27 a share before they were even profitable. And of course, just some charts from you guys. The other cool thing is that what's really interesting is this. What's cool is I've, of course, been in the stock since $27 a share. And you can see some charts here. Look at their revenues just straight grinding up, like so easy. It's like just so they're simply just flawlessly executing. But look at their income, right? This is the money they're making. Although it was negative, now it's, they've turned profitable now. They're turning some money. And of course they're trending up, which is what you want to see. Look at their operating income over here back in 2019, losing a ton of money. But from as early as 2019, look at how they're trending up. Look at how they're trending up now into profitability. They're getting in there, man. They're getting in there, and I so believe in them. I know so many people they can't go about their lives without Uber, man. And of course, what's really cool is just recently Bill Ackman bought $2 billion worth of Uber. This was in April. And of course, I've been in this since 2022. It's just cool to know that, there's a big time investor coming into this, but I've been in this. So it's just really cool to see that. So of course, one of the stocks I'm looking to buy now, guys, is going to be Uber without a doubt. I personally use this so much, and it helps me so dang much, guys. So you've got this little bit of a demand here at $60 a share. Of course, it was a prior resistance here. We failed to get above 60 for so many weeks. Attempt higher, fail. So many attempts now. That previous resistance is, of course, really strong demand. You can see after we broke $60 a share, came down, retested that 58 area. It's really this whole general area here. Let's call it that 55 range, and bought up. 55 again, bought up. 60, bought up. So guys, without a doubt, I'm looking to buy this under 55. We're currently sitting at 60. This won't show it yet because the market's not open, but we're currently at $60 a share, just under 60. Really, if I can get this under 55, I am so happy. I am a happy camper if I can get this under there. And that's really that. That's really that for Uber. Now, of course, one of the most controversial stocks ever, Tesla. Tesla, guys, I'm looking to, it's just really insane, all the stuff that's going on with them. Sucks that, allow me just a second. It's really unfortunate when a big entrepreneur, a big smart guy like Elon Musk, he's so friendly and funny and cool and all, and you might not agree, and that's okay. But, this guy took on the responsibility of getting into the government and really uncovering all the dang corruption that's going on, sending our dang money over to Ukraine, like sending so much money to Ukraine, and then now Ukraine recently saying in that interview with Fox that they can't even account for all the money that the U.S. has given them. Like, where has it all even went? And, the fact that Ukraine has the ability to cease fire right now, and they're not taking it. They're not taking it for some reason. And of course, Russia has broken some rules and whatnot as well. But the point is, Elon Musk joined the government to uncover corruption that our own government is doing on us, okay? And that's a great thing. Nobody should be against that. But of course, you've got some really weird people that are protesting outside of Tesla dealerships and shitting on cars and on Tesla cars and keying them and vandalizing them and shooting up Tesla stores. Who does that? Who does that against someone who's trying to make sure, who's holding our government accountable, is keeping track of where every dollar that's being taken from us? Don't forget, we pay so much in taxes. We pay taxes on the food we buy. You pay taxes on the money you make. You pay taxes on the cars, you pay taxes on the house. Even though you own your house, you pay taxes on that. You pay taxes on everything. What's the saying goes? There's a really cool saying, but taxes is just annoying, man. And this guy is keeping your government accountable and making sure they're doing their job. And apart from that, the money he's uncovering from the corruption from your own government, he's looking to give you that money back. I think it's if you're a homeowner, he's looking to give you some of that money back. But it's like, how can you possibly hate the guy? How could you ever? This guy spent $40 billion on acquiring Twitter, right? He spent all that money acquiring Twitter just to find out that Twitter was censoring our own doctors, our own surgeons, censoring people in the government, whistleblowing things, the Twitter files. Like, he bought Twitter and uncovered so much corruption and exposed it, and he took a $40 billion hit for that. And now we have free speech on there. You can see things from all around the world without being censored, like Facebook was doing, like old Twitter was doing, now the new X. So he preserved freedom of speech. He's holding your government accountable. He's trying to give you money back. Now they're finding 11-month-old kids with small, with SBA loans and whatnot. So it's like there's so much fraud going on, man. And This guy's just trying to expose it and fix it. How could you not? How could you be against that? Anyways, he's gotten caught up in all of this crap, and it's really been affecting Tesla. And if we're being honest, guys, Tesla alone is really hard to measure. Like, you could look into their earnings, and honestly, you're gonna see that the company, even now, the company is, you can call it overvalued because, they've got a lot of cash. They've got like over $30 billion in cash as a company. So that's like your little backup weapon. So they're good. But um, Tesla's price is derived from the stuff they're going to be doing in the future. Those dang robo taxis, the humanoid robots, all that kind of stuff. What matters the most is that Tesla's that kind of company that you want to bet on. Okay, you don't want to put your life savings on it, but you want to have some chips in there because it's bound to do great in the future. They're doing so many great things. Their cars are the best selling cars in the world, all around the world, the best selling cars. And you're out of these cars, you're getting like the performance of $150,000 car and a $50,000 car. So it's insane. They're doing great. Now, of course, in Tesla's case, with Elon Musk being a part of Doge, it's really taking a toll on them. Um, and I also wanted you guys to check this chart out. If you can simply average in the Tesla below $250, let's call it, I know this was about 220, and it just so happens to recover to all-time highs. Doesn't matter if it takes 3 or 5 years, whatever money you put in, you're gonna make more than that amount. You're gonna make so much more. If you put in 10 grand, you're gonna make almost 13K, okay? From Tesla recovering here, and the lower it gets, the more of a return you're gonna make. Um, Look at this. If this gets to $200 a share, the lower it gets, guys, the better off you are. And I also want to remind you guys about something as well. Something, and also, guys, this advice and this education and research I'm giving you guys is really valuable. So all I ask is that you pay attention. There's nothing worse than you putting an effort and people taking it for granted. Well, of course, it's not my fault if anyone takes it for granted. I'm doing my part and helping everyone. I just want to show you guys this quick story about NVIDIA that you can't find any YouTube videos about. You can go online and find like a general thing that thesis or articles that were going on at this time. But I want to explain to you of a time when Nvidia stock was getting completely beat up so badly, and I remember it so vividly. So this purple area here, at that time I was working at TD Bank, and of course on the way to work and from work I'd be listening to CNBC, man, always locked in, keeping an eye on the markets. I'd be listening to CNBC, right? And at the time, Nvidia stock was going through some trouble, and so many money managers on, um, of course, guys, please pay attention. We're almost done here. A bunch of money managers and research analysts on CNBC were saying that everyone and their mother had bought in enough GPUs, and the whole world had bought in enough miners, GPUs and chips for Bitcoin mining and for getting ahead in advanced technologies, and simply that the demand for Nvidia's products were going to slow. And the bigger story, you'd hear this everywhere. Like, if you looked at CNBC or small investing channels, or if you just generally looked up Nvidia, the idea was that because everyone is crypto mining, everyone already has the amount of GPUs they need and they don't need any more. And at the time, Nvidia was trading at $120 a share, okay? Of course, they have done a 10 to 1 stock split since then, which of course they split at $1,200 a share, which brings this price down to 120, right? So now get this. The old 120 is now 12, right? So this thing was trading at $120 a share, guys. Get this, get this. Oh my gosh, I'm getting so high. Get this, guys. Pay attention, please. Please pay attention. So Nvidia's trading at $120 a share, and everyone is bashing the stock. They can't say good thing about it. Not a good thing they can say about it, right? And what do you know? AI spontaneously comes out of nowhere. AI comes out of nowhere, and autonomous vehicles and self-driving cars and all this crazy stuff. And of course, the market also started recovering itself. Of course, the market started also recovering from that 9% inflation. Same thing you saw in the Nasdaq chart. I'm telling you guys, this is Nvidia's, moves the markets. Of course, they were stuck under that, and pretty much the AI story came out, and look, this thing runs from $120 a share to $1,200, guys. That's such a massive oh, I'm gonna throw $100 in there, and they're gonna give me $1,200 back. That's an insane return, okay? So it went from $120 to $1,200, and then split to $120 and ran back up to $153. What an insane company and what an insane run. Something similar like that is what I believe is bound to happen to Tesla, okay? Because with this thing robo-taxi they have coming out this year, and also the unsupervised self-driving they have, and the dang humanoid robots that they're going to use in their own factories, and Elon Musk is also going to, announce his departure from Doge soon. And plus all the, the big headwinds and turmoil Tesla's in, they're bound to recover from it. They're just bound to recover from it. Now, anything below $200 a share, you really got to take advantage of this, guys. You just got to. I've been in Tesla since the pre-split at $400 a share. Okay, at $400 a share, I've been a part of this. But that's pre-split. So that's split adjusted is like 130, 135. So I've been in this for a while, guys. And thank you to Tesla. Thank you to Elon Musk. I've been able to pay for my dang college expenses, and I've gone ahead in life, and I've invested in other stocks. So Investa. Tesla has been absolutely great to me, guys. I can't be thankful enough for Elon Musk. Like, if Elon Musk hasn't made you money, what are you doing? Come on. And that's it, guys. Okay. Tesla under $200 a share. You can't be more greedy. You gotta start buying. Okay. Tesla at 200. Uber under $55 a share, guys. Look at this Tesla chart here. It's pretty cool. And it's legit, From since 2010, your consolidation, your boom phase, consolidation, boom, something similar is bound to happen. But I am thinking you could maybe get down to 180. I'm thinking 180. I don't know that you could get down lower than 180 unless something catastrophic happens with the company, which could also happen, guys. Which could also happen. You never know. Let's see if I've got anything else to go over. Guys, also Netflix. So the bigger thing I also wanted to remember is, this goes hand in hand with the Tesla Nvidia story, the Tesla Netflix story, okay? Because I haven't owned Netflix, and I'm kind of beating myself up about it because, guys, when I was a kid, I used to be subscribed to the Netflix. I used to be subscribed to the big Netflix. Um, I used to be subscribed to the Netflix mailing thing where they'd send you a dang CD. I think it was like every month or something like that. And if just think about it. We went from just okay. This is just talking about the evolution of a company that I find so interesting, man. That you guys is worth a quick listen, okay? So I think it was like 15. Yeah, I was 15 years old. Had to be. And my neighbor is getting these CDs from Netflix brought over every single month, and I'm like, dang, I want to do that too. And he's getting movies like Ice Age, I think I remember that, some old cool ass movies, man. And I'm like, yo, I want to do that too. So of course, my loving mom signed me up for it, and it's just pretty cool knowing I got that movie to watch with my fams every month. And now you come to think about it, 10 years later, this dang Netflix company, they have pretty much the largest streaming platform in like literally ever. They went from him mailing you a CD every single month to literally hosting football games, right? To hosting football games and you streaming onto your phone and computer and everywhere you are, man. You're watching the best shows and documentaries and whatnot. To now, not too long ago, we had that big football game it was, and it had the it was simply the most streamed event in the world. I don't even know how many people were watching it. I guess God had to have been at least 50 million or more, close to 50 million, and Netflix hosted the dang event. So they've come a long way, and the company is sitting at like a $300 billion market cap, while Tesla is just under a trillion, or like 800 billion. Think about it, Netflix is 300 billion. So Netflix is also another big, company I'm looking to get into, and you know, when they had streamed that big event, I believe it was this candle here. It might have been somewhere in January week of January 20th, where they streamed that event. It went fantastically. No fuzziness, no cutouts. The ad revenue, everything was fantastic. Record number streamers, the biggest watched event in the world. The next day, boom, it rips. So now that we've gotten this downturn in the market, you're now able to basically buy Netflix, and they basically erased that event from history. So you're getting like a little bit of a reset. All of that is in the stock, and they've shown you they have the power to stream the biggest events in the world, and now you're buying it for a cheaper price than when that even happened. So Netflix is another one to keep an eye out for. Tesla, Netflix, Uber, the Nasdaq, cybersecurity stocks. So guys, I'm gonna go ahead and wrap this up now. I really appreciate you guys for checking out this video, and I really hope you stayed until the end. I was spitting nothing but facts for you guys, and please don't be like those people that go years and years and years without investing in the market. You've got to get some money in there, and you're gonna be making money on your sleep, okay? You've just got to do it. You've just got to do it. And of course, feel free to check out my other videos, guys. You already know this channel is going to be focused around futures, day trading, swing trading, options trading, bear call and put spreads, that kind of thing, long-term investing. So it's going to be mainly focused around trading and investing, guys. Trading recaps. I love showing you guys my trading recaps. Of course, if you want to tune into that, I'm going to be posting more content soon, guys. I'm going to get into this whole YouTube thing. I'm pretty passionate about it. And once in a while, you're going to be seeing videos like day in the life videos, gambling videos, car stuff, my family, all that kind of stuff. Because, I'm a strong believer in when I love keeping up with a content creator, if I'm following them about something I'm passionate about, I also like seeing, the other aspects of their life, like just things they do. It's pretty cool. So I definitely want to do that. You learn more about them, kind of thing. So you're going to be seeing more of that kind of stuff on this channel, guys. So stay tuned. And please, guys, go to Charles Schwab or Robinhood or any of these guys. Open an individual brokerage account, get some money in there, and start getting some money into the market, okay? There's no telling if it's going to recover next week, next year, within 3 months. You cannot predict this. What you can predict is that you will make money within the next year. If you buy within the next couple months, you will be up, guys. You're gonna be up. So just hang tight. 1 year later, you're all dang near guaranteed to be up, okay? The only way you're not is something really dang bad happens, which is not likely. Which is why in the first place, you're getting money in here that you're not gonna need to touch for some time, okay? We covered the best times to buy. 2018, first round of tariffs, oversold, great opportunity to buy. 2020, virus, oversold, excellent buying opportunity. 9% inflation of 2020, Federal Reserve needed to hike interest rates to combat inflation. It finally came down. Boom, we ripped. Now we've got Trump tariffs 2.0, guys, and it's going to be another great buying opportunity. And I can't wait to, catch up with you guys later, and you're gonna be able to see the big, how positive we came out from this. And of course, guys, keep an eye out for my day trading recaps. That's really going to be the more popular thing on this channel, which is what I'm more passionate about. Um, you know, so I hope you guys have a great week of April the 7th. Go ahead and start getting some money in there this week. Go ahead and get 10 to 20% of your capital in there. Maybe even more if you want to be aggressive. And also measure out your risk tolerance. If you want to be higher risk, high reward, and you're younger, you've got some time, look into Tesla, look into the Nasdaq names, start averaging in, and you're going to be okay. You want a less risky approach? Just buy the Nasdaq outright. You're going to buy the QQQ ETF symbol or SPY. Go ahead and buy those, guys. Get yourself a nice little return, and you're owning a big basket of stocks instead of one particular stock. So if you want, from your, and also keep yourself diversified. So you can buy some names outright. If you want some Tesla and Uber and Netflix, of that 10 to 20% you're investing into these companies. Get 30% into the individual names and get 70% the Nasdaq as a whole, or get into a different sector. But it's really technology and growth is really where you want to be. It's the most aggressive approach and where you want to be in at times like this. Okay, guys. So I hope you have a great week. After you start buying these stocks, guys, don't really pay attention to how much you're up and down on them. Just focus on where the market's moving and if it's still a great time to buy. And I wish you guys a great week, great productive week, and I'll see you guys in my next video. Peace and love for everyone. Take care.